All right, welcome back to this week's breakout watch list from September 25th to the 29th. Now, two other quick announcements before we get into the stocks. The first, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. And for today, you can try MarketSmith for free, no credit card required, using the link in the comment section below. And number two, I won't be making a video next week because I'm getting married on Saturday, and I promise my future wife I will not be thinking about stocks at all. With those announcements out of the way, here are the 10 stocks that we'll cover in today's video. Let's jump to MarketSmith, starting with ANF. The first stock that we'll cover is ANF, Abercrombie & Fitch. Now, I know this was on the watch list last week. I think it was the week before as well. It does continue to act well, even though it started to pull back through the 8 and 21 EMAs last week. Taking a look at the group strength, 51st out of 197. Not the strongest group in the market, but overall B+ group strength rating. But what I like with MarketSmith is within the group, within that industry group, you can see there's 34 stocks, and on a relative strength basis, this is the strongest stock within the group. On a composite basis, basically a combination of all the different ratings, it's the second strongest out of 34. So even though it's not the strongest group, it's a leading stock within that group acting well. Now back to the technicals here. We did undercut the 21 EMA on Thursday, which I kind of like. This looked like it was going to really start to break down and accelerate to the downside if you're looking at just price. But if you look at volume, the last 2 days of the sell-offs to the 21 EMA, then through the 21 EMA, came on the lightest volume in this entire pullback. The next day, we got a gap up and then follow through back through the $50 area, through the 21 EMA, and even tested the 8-day EMA before closing up 2.7%. So as the market pressure lifts, on Friday the indexes were basically flat. This was able to rally 2.7%. That's another sign of relative strength that we want to be focusing on. So with this, what I'm really looking for is continued relative strength if we see more distribution in the market to start the week. Otherwise, just a break over Friday's high, that would be 51.35, and then managing the stop under $50. Even under Friday's low is a nice, tight, reasonable stop there for ANF. Next, we have AROC, and this is in the oil and gas equipment, fourth strongest group out of 197. So this one is one of the strongest groups. You got the A+ group strength rating. Out of 20 stocks, this is fifth on relative strength, but number one on overall composite, because fundamentals on this are so strong. Just last quarter, they grew their earnings 45%, sales up 15%, after-tax profit margins up 10% year over year. You can see the last 4 quarters all positive as well. So growing strength fundamentally. Technically, we had this nice base, started to break out from 10 all the way up to 13 before pulling back to the 50-day moving average. Again, for the most part, lighter than average volume. This is that quad witching day, so you have to take that with a grain of salt. But pulling back into the 50-day, you have the 21 above it. Nice tight risk management here, just a break over Friday's high, stop under Thursday's low as a potential entry point for AROC. Next, we have CRNX, another repeat from last week's breakout watch list. This is a biotech stock. Biotechs don't tend to trade in line with the market, so when the market does go through a corrective phase, there's always going to be a few biotech stocks to watch. This is one that had a really nice move up 63% on 2,500% the average daily volume. Follow through on day 2, up another 17% on 920% the average daily volume, closing above 30. And then we do kind of pull back on decreasing volume to the 8-day moving average on Thursday, bounced right at that area, then rallied back up. We can go to a 30-minute chart, and you can see just how tight this price action has been. Now, as we did pull back, the latest pullback was supported at $28. So that's another area where you can watch, where if you are watching the pullback and then you see buying support come in right around that area, that's kind of an alternative area to enter where you can get your stop at $27.85. Very, very tight risk management. And if you're going to trade in this market, that's how I would trade. Now, that's not what I'm promoting. I think you should be nearly 100% cash if you're a swing trader on the long side. But that's a way that you could play a name like this that's not as correlated with the market and try to get some risk on. Now, I started this video with Abercrombie & Fitch because it wasn't a tech stock, but there are a few tech stocks that are actually holding up well. One is DELL, which is actually in the strongest group in the market right now, computer hardware. Number 1 out of 197. Within the 14 stocks that make up that group, it's number 3rd ranked on relative strength rating and number 4 on overall composite. DELL had earnings on the 1st of September, where the stock rallied 21% on 700% the average daily volume and closed upper half of the daily range. From there, we consolidated a bit, tried to rally, but because the market came under pressure, we shouldn't expect stocks to continue to rally as the market comes under further distribution. But what we're looking for is relative strength here, and that's exactly what we're seeing with DELL. Pulling back just to the 8-day EMA, bounced, like a lot of the stocks on Thursday, set in a lower low in the pullback, but on Friday we gapped higher, rallied up 2.3%, very similar to Abercrombie & Fitch. When that market pressure lifted, it was able to rally right up to $70. That's the sign of relative strength that we're really trying to hone in on. So with this, I would love a couple days more for it to flag out here, allow the 21 EMA to catch up. And then ideally we can use $70 as a potential pivot maybe next week. But for now, if you're going to trade it, I would look to get in around 70, stop under the low from Thursday, 68.04. So not a very wide stop, but this is not a very fast moving stock either for DELL. Now, given how rough the market was last week, it's extremely surprising to see any stocks making 52-week highs. This is one, DFIN, that actually did last week. If we go on a weekly chart, you can see a nice kind of VCP base, things get tight, and then we start to break out on above average volume. Now, one thing I do want to point out here, only 161,000 shares traded. It is a $52 stock, but for a lot of people, that might be too illiquid to trade. If that's the case for you, just skip on to this one. But it's a stock that's making a new 52-week high while the market's in a correction, so something that I wanted to throw on your radar. There's no easy way to trade this one at this point. I'm really waiting for a pullback into the 8-day EMA or into the breakout point around 50.50 or even $50 for that 21 EMA to get situated in. Because it's a thinner traded stock, it has the ability to spike higher, but it also has the ability to spike lower. And in a tough market, eventually these do tend to break to the downside. So I'm setting alerts just above $50. So if we pull in on light volume, or if we pull in as the market's pulling in, then getting in around that area, managing our risk against the 21 EMA is the best way to play this. But again, a little bit thinner, but a stock making 52-week highs as the market's in correction, something that should be on your watch list. Next, we have ESTC doing exactly the same as DFIN, new 52-week highs, but this one is not illiquid at all. 1.1 million shares traded on average with an $80 price tag. Really nice move on earnings, up 20%, where earnings were up 267% year over year, sales up 17%, after-tax profit margins up 8.6%. In a relatively strong group, computer software database, 22 out of 197, and we do have our earnings estimates increasing for 2024 and 2025. This one rallied up to $80 as the market kind of rallied, and then as the market came under distribution or selling pressure, it did just pull back into the 8-day EMA. So another way to look for relative strength is look for stocks pulling back to lower duration moving averages if they're in uptrends. So if the indexes are pulling back to their 21 EMAs, take a look at the stocks only pulling back to their 8 days. If the indexes are pulling back to the 50-day, stocks that are above their 21 EMAs are still showing relative strength. The market's under the 50-day, it's under the 21-day. This stock is just pulling back to the 8-day EMA and doing so on lighter than average volume. That should be a big sign of relative strength for you. And then even before the market had a sideways day like Friday, this started rallying on Thursday up 1.8%, then Friday up another 2.3%. Has to be a stock on your watch list. Ideally, for this setup, the market continues under distribution Monday, Tuesday, maybe a couple tight days under $80, then we could use the $80 pivot as our entry point. Next, we have QLYS. This is in computer software security, 56th out of 197, so we got a B+ group strength rating, but a 98 earnings per share rating. You can see earnings per share growing from 20 to 22, 43, so earnings accelerating year over year. Sales 19, 15, 14, so decelerating but still growing year over year. And after-tax profit margins also accelerating 29%, 31%, 34%. This is a stock that's been in a nice uptrend from $101 all the way up to, $157. Pulling back through the 8-day to the 21. Again, this is pulling back to the 21 while the indexes are below the 50-day. That's a sign of relative strength. And you can see it with the relative strength rating continue to rallying up, 91 right now, individual basis. Out of 34 stocks within the group, this is 5th strongest relative strength, number 2 overall composite. So a lot of fundamentals and technicals lining up for this one. But without that M factor, without the market behind you, it's still going to be tough to make progress on any trades. What I like, again, as the market trades sideways on Friday, this had the ability to rally up 1.4%, closing right near the high of the day, back through the 21, back through the 8-day EMA. We're just looking for more tightened price action where we can use that high on Friday later on next week, maybe after some constructive bounce to potentially trade that. But really, what I'm looking for is, does this hold 150 on further distribution in the market? Again, I don't plan on trading the early part of next week, and with my wedding, I'm not planning on trading at all next week, but maybe after that, we can get a couple weeks tightening up right around 150 where we can trade this one, QLYS. Next, we have TDW going back to the oil and gas theme. This is an oil and gas field services, number 2 out of 197. So obviously A+ group strength rating, 99 composite, 99 individual relative strength rating. This is the number 1 strongest stock on a relative strength basis within that group, number 1 overall composite as well. Taking a look at this is a pretty sloppy base, but eventually it does tighten up for a launchpad setup where you have the 8, 21, and the 50-day moving average right close to each other. Basically a contraction of the volatility, and then we get the expansion to the upside, rallying from $48 all the way up to $70. Eventually, as the market pulls in, as oil and gas stocks pulled in, this pulled in as well, just to the 21 EMA, kind of had that shakeout on Thursday. And then as the market pressure goes sideways, I'm going to keep saying this because it's something I want to drill into your head. Not an oil and gas pun that I thought of, but it's a good one now. As that market traded sideways, this had the ability to gap up, attempt to rally, and then finish the day up 1%. Just using the high from Friday and Thursday as a potential entry, 67.25, and then stop under Friday's low and the 21 EMA. Nice tight risk on this one. I still have 2 more stocks to cover in this video, but if you guys are enjoying it and enjoying MarketSmith, make sure you try it out for yourself using the link in the comment section. It's 100% free today. You don't even need a credit card. Make sure you check it out. But back to the stocks, we have VERX. This is another computer software financial stock, 25th out of 197, just like DFIN. That's holding up relatively well. Now this is kind of putting in an inverse head and shoulders. If I bring up the temporary line pen, you have the left shoulder, the head, and what we're looking for is that right shoulder not to come down as much as the left shoulder. So the left shoulder is low, 1872 right now. So far, we've pulled back to the 50-day, and it looks like we're starting to curl up above that level. Let me get the price. Right around 2050. So like we've covered, as the market comes under pressure, we expect our stocks to come under pressure as well. But as that pressure lifts, this stock has the ability to rally and actually does so on Thursday, up 1%, before another 2% move on Friday, showing that relative strength even before the market has the ability to bounce there. If the market comes under more pressure, then we're looking to build out a little base here with 22 as a potential pivot. This one, a little bit more liquid, 260,000 or 280,000 shares traded, $21 as compared to DFIN, but still relatively thin. If that's not for you, again, that's not for you, that's fine, but a stock that's showing relative strength in a group that's showing relative strength that I want to throw on your radar. And last stock that we'll cover is VST, very, very strong stock, plenty liquid, 5.1 million shares traded a day on average. Stock that bounced at the 200-day moving average at the end of May before really starting this rally from $23 all the way up to $34. Has come under pressure recently, as every stock has. Had a shakeout on Wednesday to the 21 EMA. Things looked really ugly here, but after that, we gapped up. Did not have to fill this gap. Inside day on Friday, down 0.7%. This is one where I would look for this in a couple weeks as it bases out. I just wanted to put it on your radar now because I'm going to be gone for next week. But if we can just build out this kind of downtrend line and then allow the 21 EMA to catch up here, a couple more, my drawing skills aren't perfect, but basically consolidate through here and then take a look at this later on in the week or the beginning part of next week. Still a stock that should be on your radar because of the power, because of the relative strength here, because of the fundamentals and earnings 40 days away. We don't have to worry about that. Number 1 strongest stock within the group. This is VST. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video, and I'll see you in the next one.